Hello, everyone. Welcome to Good Money, your trusted source for personal finance advice. I'm Tanya Rivero in New York. As you know, Congress squeaked out a new health care law this year, but the main provisions don't go into effect until the year 2014. So we wanted to know, how can you cut the cost of your health insurance in the meantime? Well, today we're continuing our Save Big series with our Good Money consumer correspondent, Elizabeth Leamy. She joins us now from Washington with 5 ways to save on your health insurance. Hi there, Elizabeth. Great to see you.
Hey, Tanya.
So, Elizabeth, you say the first strategy is to raise your deductible. Is that right?
That's right. I mean, this is insurance. And what's the first thing we want to do when we want to save money on car insurance or homeowners insurance? We raise the deductible. Now, remember, the deductible is the part you have to pay out of pocket before the insurance coverage kicks in. And if you choose a higher deductible, the insurance company will reward you basically with a lower premium. And this can really work well for some people. For example, a healthy 41-year-old woman at one company, if she were to raise her deductible from $500 up to $1,500 per year, then her savings on those premiums would be $1,428. In other words, she'd have enough money in savings if she set it aside to pay for the difference in the deductible and have money left over. So it can really work beautifully. The key is, don't raise your deductible so high that it would ruin you financially if you actually did have to pay it.
And so if you are someone who does have some continuing health problems, that may not be for you.
Unless you make a strategic decision that you're going to pay for, say, the first $1,000 or a couple $1,000s of your care yourself in order to get this lower premium, so that from there on out, your health care is fully covered. It's one way to save.
Absolutely. All right, next you say open a health savings account. Now, is this different from a flex spending account that you can open at work?
Yes, different and better. I love these, but very few people seem to know about them. Health savings accounts, or HSAs, totally different from flexible spending accounts, more lucrative and less hassle. They also are tax-free accounts you can use to pay for medical expenses, from your copays to your prescriptions to whatever else you need. But unlike a flexible spending account, which is so obnoxious because you have to guess how much money you're going to need for medical care in the coming year, and then if you guessed wrong, you have to forfeit the money, which, by the way, goes to your employer. With the health savings account, the amount rolls over from year to year. It's portable, so if you change employers, you can take it with you. And at age 65, you can cash it in for any purpose. So if you're fortunate health-wise, you could theoretically cash that money in at age 65 and use it for something else.
That's
a
fantastic.
Trip around the world or something. Yeah.
How do you set them up? You just contact your HR department?
Well, not all companies offer them, which I think is a shame, but many, many do, and more people need to be asking for them. I've actually asked our employer to start one for us.
And what have they said?
They have said they want to do it.
Good.
And if you're self-employed, you can set them up at a bank.
Right. All right. Yeah. So that sounds like a fantastic plan. Now, if you don't have health insurance through work, are there ways to not only get coverage but actually save money on it as well?
Yeah, very often what you need is a group policy, which is what you would get at work. But if you can't get it at work, there are creative ways. For example, you can join your state's Farm Bureau. Who knew? You do not have to be a farmer, first of all. That's the big secret. And if you join the Farm Bureau in your state, you can get health insurance through that. Another way is, if you're eligible to join any professional associations, join up and get health insurance that way. And people love to hate their credit card companies, and we talk about the evils of credit cards sometimes on this show, but some credit card companies do offer group health insurance as one of the benefits of the card. So you could learn to love your card company in that case.
Very, very interesting. Now, we did talk once on the show about those big box companies like the BJ's and the Costco's and the Sam's, that they offer group auto insurance. Do they also offer group health insurance?
That's a good question. I don't know the answer.
I wonder.
Will find out.
I wonder.
Yeah.
All right. Now, here's another tip that you have, is to also, if the group insurance is not for you, price the individual plans carefully, right?
Right. Now, this sounds like a contradiction of what I was just talking about, how you can save money by joining a group plan. For some people, particularly young, healthy people, believe it or not, it can actually be cheaper to get private individual health insurance. Now, if you have a medical condition, you need to be part of a group. But if you're young and healthy, yes, it can be cheaper to go individual. And just one example, I actually know a woman who, if she had signed up to be a part of her husband's work plan, it would have cost her $350 a month. but instead she found an individual policy for herself, very comparable, for just $115 a month. So her savings, $235 a month, $2,820 a year. So young people with no health conditions might want to look into that.
Is that typical? Because I know, Elizabeth, so many of us, we just automatically sign on to the spouse's health insurance, whoever's working, without looking into it. Is that a typical increase per spouse or per family member?
It is typical that if you're young and healthy, you can save with an individual plan. Reason being, with a work plan, they have to accept everyone. So the insurance company prices the policy accordingly to cover that risk of this broad population that could be covered under this work policy. But in an individual policy, you are just considered based on your own health.
Great. So if you're in good health, it works for you. All right. Now, finally, you say when you look for that individual plan, you can get some help with your shopping from an independent insurance agent. Is that right?
That's right. The great thing about them is that it's one phone call, but it counts as shopping around because independent insurance agents represent multiple different insurance companies, and they will shop around for you and give you lots of bids, essentially, from different health insurance companies. And let me just give you one example. I actually had an independent agent shop around for this big Virginia family when I did a savings makeover. 2 adults and 7 kids. They were paying $12,000 a year for health insurance. Just by switching to another big reputable company, not Bob's Health Insurance in a trailer somewhere, another big reputable company, they could save $6,756 a year for comparable coverage.
Look at that.
Pretty amazing. And that independent agent is who found it for them.
Certainly pays to shop around there, Elizabeth. We only have a few seconds, but you also have some ways that parents can save on health insurance by piggybacking on their kids' insurance. Is that right?
Yes, amazingly enough, some colleges offer commercial health plans to students, and you as the parent may be able to get on your child's health plan, the first time in life that they're going to help you financially, right? The other thing, though, to keep in mind is if you already have insurance, then you don't want to have to pay for this policy that the college is putting out there, and a lot of people accidentally are paying for 2 policies because they don't see it in the fine print.
Absolutely. All right, Elizabeth, thank you so much for all that great information. And if you'd like to learn more ways to save big, be sure to check out Elizabeth's book, Save Big.